If you're just being introduced to the concept of passive income, two markets that you should definitely start looking at to begin generating passive income should be the real estate market and the stock market. In this video, I'm going to compare both markets when it comes to investing for passive income, how an investing concept that's a pro in one market can be applied to the other market, and the risk associated with that, so you can figure out which market is right for you to start investing in and begin today. Hi, I'm Nadia, one half of the Wealth Twins, and I personally use both real estate and the stock market to diversify my passive income. They've given me the financial freedom to be able to retire at the age of 35. So let's get into it. First things first, when you begin investing in something new, it's best to start off with a small amount of money so you can get your feet wet. This also allows you to understand if that investment choice is right for you. Now, when we compare the stock market to the real estate market, it seems that it is easier to start off small in the stock market to begin making passive income. That's because the barrier of entry in order to get into the stock market is a lot less than it is to get into real estate. Now, what do I mean by a barrier of entry? The cost of getting into the stock market to start making passive income is a lot less than it would be if you wanted to start in the real estate market. Now, for the most part, that is true. You can begin making passive income in the stock market by investing as little as $1, sometimes $5. But you can start immediately and start making passive income. You do this in the stock market by investing in fractional shares. A fractional share, or some people call it stock slices, is a fraction of a share that you can buy in a company and begin making passive income from that company. Now, instead of buying a whole share, let's say that share is $100, you can buy a fraction of that share for $1 or $5. Now, depending on the type of company you invest in, you may be able to participate in the dividend of that company and begin receiving passive income with your fractional share. You can start investing in fractional shares on either Charles Schwab or Fidelity if you're looking for a broker that provides that option. Now, traditionally, if you wanted to start making passive income in the real estate market, it would cost you thousands of dollars to enter the real estate market. Now, that's if you're looking to start traditionally. But there is a way for you to apply the concept of using little to no money and start making passive income in the real estate market. Now, I'm not talking about any no money down schemes or buyer financing, nothing like that. This is something that anyone can start today in order to start making passive income from real estate. In order to begin making passive income from real estate without using any of your money, all you need is a space that you can rent to someone else. This concept is called house hacking. Now, you can begin house hacking with the place you currently live in. Let's say you have a 2-bedroom apartment, but it's only you. You can get a roommate and have that roommate pay you on a monthly basis. As long as the lease is in your name, you understand how much the rent is. If you can get that roommate to pay more than half of the rent, you can pocket the difference, and that is passive income in your pocket. This is called house hacking. Now, let's say you don't have a space that allows you to have a roommate. Maybe you have a space that's just enough for you. You can begin renting out that space as an Airbnb. Airbnb allows you to make passive income using the space you currently have without any money coming out of your pocket. Now, I've tried Airbnb in the past. It's not for me, but I know plenty of people who are able to make a full-time income by renting out their spaces on Airbnb. Depending on your risk tolerance and how much money you need, these may be the best options for you to begin making passive income through the real estate you currently have. I understand it's not comfortable sharing your space with someone else, and there are horror stories of people squatting or not leaving your place or just tearing it up. Especially if you live in a tenant-friendly state, I can understand your fear when it comes to letting someone into your space. Even if you don't want someone in your space, house hacking can still be an option for you. Let's say you have a driveway or a garage that you don't currently use, or you don't need to use it. You can rent out that driveway or that garage on a monthly basis and make money from that. I currently do that, and it's something that works well for me. Now, let's say you don't want to do this on a monthly basis, but you live near an event space that's pretty busy. I've seen people rent out their garage space or their driveway during a big event and charging others to park in that space. I've seen 4 or 5 cars parked in one lot, and the homeowners make a lot of money from that event during that day. This is something that can easily bring you passive income without requiring you to change up your daily life. If you're looking to make a lot of passive income quickly in either market, you're going to need a lot of money. Now, when it comes to the real estate market, this is a lot easier to do because you can use O.P.M. O.P.M stands for other people's money. When you use other people's money, you're leveraging the power of your money. You don't need a lot of money on your end in order to buy an asset that's worth a lot more. You do this in real estate by getting a loan. You get a mortgage on the property you're looking to buy, and that allows you to buy something that's worth way more than the money you put down. When it comes to leverage, the real estate market is great because it allows you to really maximize the power of the cash you have on hand. Now, you can do this in the stock market through a concept called buying on margin. Now, I don't suggest people buy on margin in the stock market because it's a very risky play. If your broker allows you to buy on margin, you're essentially taking a loan from your broker to trade with the broker's money. Buying on margin works out if the securities you buy go up in value, but those securities can also go down in value, and you not only will be out the money that you borrow, but you can be out a lot more. The broker will issue a margin call, and you will be on the hook to pay that money back even if you don't have that cash on hand. So when it comes to using other people's money in the stock market, it's a lot riskier than it is to use other people's money in the real estate market. You can do it, but I suggest you find other ways to invest in the stock market rather than buying on margin. When it comes to generating passive income, one of the key things that you need to keep in mind is that you want to make sure that passive income comes in on a consistent basis. You want to be able to depend on that passive income. One way to depend on that passive income is to protect your investments through diversification. In the stock market, you're able to buy different types of securities in different industries and in even different countries. So your diversification is a lot greater in the stock market. You're also able to diversify in the real estate market, but it's a lot more expensive and a lot harder to do. You can diversify your investments in the real estate market by investing in single-family homes, multifamily homes, or even commercial property. But it's a lot more expensive. And if you wanted to diversify even more, you can buy those properties in different locations. Now, that would require you to have a lot more money on hand and manage a lot more properties in different locations. It is a lot cheaper and easier to manage diversification of investments in the stock market. All it requires is just a handful of investments, and you will have your diversification handled, and you can manage it in one portfolio. If you want to look at diversification in the stock market, you can easily purchase ETFs or index funds to take care of this issue for you. Now, speaking of these, when it comes to being able to buy and sell your investments in either market, the stock market wins hands down. The stock market is very liquid, and what that means is that there's a lot of buying and selling of securities in the stock market. Now, the real estate market can be liquid, but if you're looking to sell your investment in the real estate market, it will take a lot longer than it does to sell an investment in the stock market. If you're looking to sell an investment in the stock market, you can do this almost immediately. Now, when it comes to the real estate market, it will take you a number of days to sell your investment. 30 days, 45 days, even more. If you're really desperate and you wanted to sell even quicker, you're most likely going to take a loss on your investment. So when it comes to liquidity, the stock market is better than the real estate market when it comes to cashing out your investment. But it can be done in the real estate market, but it's a lot more complicated, and you have the potential of losing money when you have to sell quickly in the real estate market. If you're concerned about taxes when it comes to investing for passive income, both markets provide you a way of minimizing your tax obligations. In the stock market, you can reinvest your passive income so that you wouldn't have to pay taxes on it, or you can hold your investments over a year so you wouldn't have to pay capital gains. In the real estate market, you're able to depreciate your assets so that you can lower your tax obligations. Now, I'm by no means a tax expert, so if you're worried about taxation when it comes to passive income, and that's your main decision maker when it comes to investing in the stock market versus the real estate market, my suggestion is to hire an accountant, and that accountant should be able to walk you through what your options are so you can make the best decision for you. If you want control over increasing the amount of passive income that you make, I think the real estate market provides you an easier opportunity to do this. You can increase the value of your investment by making renovations and then raising the rents as you see fit based on the market price of the area. In the stock market, you don't have that much control over increasing the amount of passive income you make other than investing more money in the market so you can be paid more passive income. But at the end of the day, when it comes to passive income in the stock market, the company ultimately makes a decision on whether or not they will pay their shareholders any passive income. So if you're interested in controlling your passive income and being able to increase it as you see fit, then real estate is probably the better option for you. Based on my investing style, I'm a long-term investor, and that translates into both the real estate market and in the stock market. When it comes to real estate, I invest in multifamilies and I look to make passive income on a long-term basis. I'm not interested in flipping properties in order to make a profit, and I don't like to have a lot of single-family houses that I have to manage. I like having a handful of properties that makes it easier for me to be able to manage. And if they go up in value, that's even great. The same thing applies to my investing style when it comes to the stock market. I focus on a handful of securities that pay me passive income, and if they increase in value, that's great. But my main goal is to make passive income, not trade back and forth. I like keeping my investments for the long term. Maybe that's not for you. The great thing about either of these markets is that an investor who comes in with a certain agenda can fulfill that agenda in either market. Either you want to make money quickly or you want to make money over the long term. Both markets provide you with those options. Real estate and the stock market can provide passive income, but they each have their own advantages and disadvantages. It's important for you to do your own research and understand the risk of each market. However, each market is a great opportunity for you to increase your wealth. Ultimately, the choice between the two comes down to your individual needs and your goals. So please take the time to consider all the factors that go into choosing one option over the other. I hope this video provided you with more clarity and push you down the road to which path may be right for you. If you would like to discover more ways on how to make passive income, check out this video right here. And please subscribe to the channel because we would love to have you as part of our community.